How's it going? I'm Jay, EscobarJ.com. This video is why investing is better than saving. I've done 4 videos on this topic, so check the description. I'm going to place the links into those videos down into the description below, so make sure you watch those first. And if you haven't watched them first, I highly recommend you do, because the video I'm going to do today ties directly into those other videos. So it's important to know what I'm talking about in the other videos so you can understand what I'm talking about in today's video. Now, I've been kind of hyping up this video because this is one I'm very excited to talk about, because it's something that I've personally done just actually recently, starting the last 2 tax seasons, and it's already starting to pay off quite a bit. I've already started to see lots of growth in this area, and that is Roth IRA accounts. Now, Roth IRA accounts, IRAs are one of the only vehicles that you can utilize and take advantage of that will provide you with tax-free income down the road. And that's why I like it so much. It's a long game, a long-term strategy, a long game. However, if you do it right and you manage it right, you will be more well off than, you'll be in the top 1% of wealth out there. And it's one of the best, if not the best way to ensure your financial freedom and really retirement. So the way it works is you can contribute $6,000 to this Roth IRA every single year. And if you're 55 or over, you can contribute $7,000 a year. Now you want to contribute the maximum amount of money every year so that you can maximize your long-term tax-free profits. And you typically want to do that towards the beginning of the year so that you can play or invest that money into the stock market and make good gains on your money in this account. And the other thing that I really like about this account is that the compound effect really, really takes a hold, in the second decade, third decade, and if you choose to do it for a fourth decade, it just skyrockets. Just absolutely, just out of this atmosphere, out of this world, stupid, crazy, ridiculous bank. And if you do the math right, and if you manage your portfolio the correct way. So when you contribute year in, year out, and you also manage the Roth IRA in the way that I talk about in my other video, Higher Returns, go check that out if you haven't watched that one. You can see huge tax-free gains over the course of 30 years. And if you choose to do it for 40 years, like I said, even bigger gains. And if you just follow the simple strategy that I talk about in the Higher Returns video, you could literally see it's pretty simple to get a 25% return if you just follow the strategy that I talk about there: buy low, sell high. And again, go watch the video. I explain a lot more detail in that video. And you really don't want to miss out on this opportunity, because if you just hand over your money to someone else, or if you just are letting your money save, you're missing the boat. You're missing a great opportunity for putting off short-term pleasure and embracing delayed gratification. And one day when you're retired, it's going to pay off in huge dividends that you will never even imagine. And even if you're older right now, my dad, quick story, my dad is in his 50s, almost 60, and he started one, and he started one, I think, in the last 5 years or 10 years, and his is going strong even, and he's still contributing year in and year out. And and even in 20 years, you can see some massive gains. And the greatest thing about it is it's all tax-free. It's all tax-free. There's really maybe 1 or 2 other vehicles out there that I think there's maybe one other vehicle that you can get tax-free money, and not tax-deferred. I talk about tax deferment in one of my other videos, but tax-free. And so the last thing that I want to talk about is with the Roth IRA is you can only contribute $6,000 a year only if you make less than a certain amount of money each year. I think it's around 70 or 80,000. And the more amounts of money that you make incrementally, then the lower number that you can contribute directly to your Roth IRA in that year. And I think it's like a sliding scale up to like 110,000, if I remember correctly, something like that. So if you make more than 110,000 a year, you cannot contribute to your Roth IRA directly. However, there is a little bit of a loophole to this with what's called a backdoor IRA, Roth IRA. And that's essentially where you open up a traditional IRA account, you feed money into it, and then from your traditional IRA, you can then contribute to your Roth IRA from the traditional IRA. It's called the backdoor Roth IRA. And that way, even the wealthy can still take advantage of this tax-free service, tax-free vehicle to ultimately end up as a multimillionaire in 20, 30, 40 years. And I think I did the math. Well, my dad and I did the math on the amounts of money that you can make. And if you invest the maximum amount of money each year, you maximize the Roth IRA account, and you manage your own portfolio, and you shoot for a target return of 25% a year, which is very, very doable, then over the course of 30 years, you'd have something like $24 million. But if you left it for an additional 10 years, after the 30 years, continuing at that same rate of 25% of your money each year, you'd be a billionaire after 40 years. It absolutely is like $2.2 billion if you just kept to that formula of making 25% a year on your money, contributing $6,000 a year, and making sure that you're gaining each year. You'd be a billionaire after 40 years. So this is just another way that you will ensure your financial freedom down the road, retirement. You can obviously open up a traditional brokerage account and invest in more risky stocks, but this is something that you want to be conservative with, something that you want to just take marginal gains, don't get too greedy, invest in very, very high quality companies who have been around long periods of time, who don't have any bad news, major bad news, who have good financials. That you do research on these companies, but these are the kind of companies you want to be trading. And again, you don't want to get too greedy, and you want to trade, maybe every week, or ideally you want to buy on 2 red days in the market and then sell on 3 green days on the 3rd green day. That's ideally, you can time the market that way. That's ideally when you want to take your gains. If you just follow that formula over the course of the year, you're going to be pretty close to making 25% on your money each year, and which will ensure that you have that nice little nest egg there at the end when you retire. So personally, for me, I'm 30 currently, and if I do this, I'll be 60 by the time my retirement account matures. And if I leave it till I'm 70, continuing that same strategy, who knows where I'll be? I'll be the next Warren Buffett just from one vehicle. So that is why I saved this video for last, because the Roth IRA is a very, very powerful vehicle and very, very powerful tool that you can also utilize. The key is to get started now and to contribute the maximum amount of money into the Roth IRA account, and to just be disciplined. It takes a lot of discipline. It takes a lot of hard work and effort to put off, immediate gratification for delayed gratification down the road. But if you do it, it's a much better feeling, and you'll be much happier that you did. So if you enjoyed this series of videos, give me a thumbs up, subscribe to the channel, hit the little bell icon so you never miss any time I release a video. If you'd like to get my help with this strategy or help with this topic, you can visit my website at escobarj.com, book a coaching session with yours truly. You can also share this with any of your friends and family if you want to share this information. You can share with any of your friends and family you feel like may need this information. That is my purpose, is to help as many people as I can. And that being said, I hope you're always learning, always growing, and always pushing forward. And I'll see you in the next video. Take care.